Welcome back, folks, to Investor Diaries. Fintech solutions has been quite the rage recently, and you all know at Investor Diaries we love fintech solutions. Well, today we're going to discuss one such fintech upstart called Upstart Solutions.
Upstart is a fintech company that's disrupting the consumer lending industry. Traditionally, banks have used credit models that incorporate at most 30 variables to determine who qualifies for financing and at what rate.
However, Upstart believes that those models deny many creditworthy borrowers and that many people who are approved are charged way too much. Case in point, 80% of Americans have never defaulted on a loan, but just 48% have access to prime credit.
To that end, Upstart leans on artificial intelligence to make consumer financing more inclusive and efficient. Its platform collects over 1,600 data points per applicant and measures those variables against 10.5 million repayment events.
This methodology allows the Upstart to quantify risk more precisely than other alternative methods. In fact, the company believes its AI models are 4 to 8 times more effective than the traditional credit models.
So in this case, who actually benefits? And the answer is everybody. Consumers benefit from greater approval rates and lower interest rates, while Upstart's bank partners benefit from greater approval rates, meaning more business and lower loss rates. And this network effect, which is created by Upstart's artificial intelligence models, should reinforce these benefits over time. In other words, as its platform is used more and more to originate more loans, Upstart will collect more data, will automatically adjust its models, making its predictive engine more efficient.
So the timeline graphic from its S1 reflects some of the most important milestones in the company's history. As you can see, Upstart has added many milestones in the recent years. These milestones have laid out solid business model which will help the company to grow quickly. Let's quickly take a look at how Upstart started. What is the initial strategy?
So we'll start with 2012 to 2014, when the early strategy was more focused on income share agreement, which is the ISA product, which enabled individuals seeking loans to sign a contract to share some of the percentage of their future income, or to help young entrepreneurs find investors.
In April 2014, Upstart announced that it is moving beyond ISA on its funding platform to start offering traditional fixed rate loans with the aim of helping younger borrowers get a line of credit. The company's main strategy behind this was to shift focus from strictly education funding to financial services, providing a larger addressable market with general purpose loans.
In addition to using traditional techniques such as income, credit report, and FICO scores to determine the credit worthiness of a potential borrower, Upstart actually developed an income and default prediction model which studies education, area of study, GPA, and work history to access the borrower's ability to repay the loan over a period of time.
Eventually, with this model and the AI lending platform, the company's strategy shifted to partnership with banks, providing them with the platform to originate consumer loans under their own brand.
So let's talk numbers here, and we'll start with sources of revenue. Upstart earns revenues from 3 defined buckets. A, platform fee, which is 58% of the revenue fee. Second is the referral fee, which is 29% of the referral fee. And third is the servicing fee, which is 13% of the revenue. Focusing on platform fees, Upstart charges its bank partners a platform fee in exchange for usage of its AI lending platform, which includes a collection of loan application data, underwriting of credit risk, verification and fraud detection, and the delivery of electronic loan offers and associated documentation.
Next up is the referral fees. Referral fees are charged to bank partners on a per borrower basis upon the origination of the loan. For bank partners that use its loan funding capabilities, these fees are charged net of any fees that the bank partner charges Upstart. Upstart pays these banks a one-time loan premium fee upon completion of the minimum holding period.
Third, servicing fees. Servicing fees is calculated as a percentage of outstanding principal, and it is charged monthly to any entity that's holding loan facilitated through the Upstart platform. And this is to compensate Upstart for the functions that they perform.
Additionally, Upstart incurs variable costs in the form of borrower acquisition costs and borrower verification and servicing costs when a loan is referred directly by Upstart.
So this table essentially summarizes the contribution economics for loans originated by bank partners in the 9 months ending September 30th, 2020. We can see that for loans that are sourced by bank partners directly, Upstart earns no referral fee, as well as they do not pay any borrower acquisition costs. However, this results in higher contribution margin, that is 67%, when the bank loans are sourced directly versus 44% when Upstart referred the loan.
Now, let's have a look at some of the key catalysts or the growth areas for Upstart. Upstart has a lot of potential paths as it nails down various plans to make more money. And here are some of the few ways that they have been considering. First, new products. Upstart has already mentioned in their S1 filing that there is a significant opportunity to expand from personal loans to auto loans, credit card mortgages, student loans, point-of-sale loans, and HELOCs. Accordingly, it began offering auto loans in the beginning of June 2020, and the first loan that was originated through Upstart was in September 2020.
Let's talk about bank distribution. Currently, a large percentage of borrowers are referred to bank partners via upstart.com. However, these banks have begun to offer Upstart-powered loans through their own websites, and management expects that the bank-driven distribution of Upstart-powered loans to grow over time as more bank partners roll out bank-branded versions of Upstart to serve to their new and existing customers directly.
Next catalyst is the continuous model improvement. So Upstart's financial growth has historically been due to its AI lending platform and the improvements and technology upgrades made on that platform. Management expects this trend to continue for the foreseeable future. Model upgrades typically result in higher approval rates, better loan offers, higher degrees of automation, and other improvements in the overall process, and the increase in the number of total loans offered. As the model accuracy improves, the company is able to retarget and approve customers who were previously denied on their lending platform.
The next is expansion through acquisitions. In Q1 of 2021, Upstart acquired Prodigy, which is a leader in automotive commerce software. As per the management, Prodigy is like the Shopify for car dealerships, helping to create this modern multi-channel car buying experience that dealerships need and consumers rightfully expect in 2021. In addition to modernizing the car buying experience, Prodigy will allow to bring Upstart's AI-enabled auto loans to dealerships across the country.
Next catalyst is targeting more customers through different languages. Upstart recently launched the Spanish version of its AI lending platform, and this will increase demand for Upstart as well as help the company target new customers. In the Q2 earnings for 2021, management stated that these types of efforts making Upstart more accessible to Spanish speakers and reducing the hard cutoffs placed by the traditional models that leverage FICO scores will make Upstart a more inclusive and an impactful platform, helping those who need it the most.
Let's talk about financials here. Upstart is growing at a phenomenal pace. During the second quarter, the bank partners originated $2.8 billion of loan using its technology, which was up 1,605% from the prior year. That caused the revenue to skyrocket 1018% to $194 million, and the company posted a $37 million profit.
Shareholders have plenty of reasons to be excited about this company. The company recently entered the auto lending space, bumping its market opportunity to $719 billion. The company also plans to pursue other markets in future, as stated earlier, including credit cards, student loans, and mortgages. This would boost its total addressable market to $4.2 trillion. To put that in perspective, Upstart facilitated just $4.5 billion in loans during the first half of 2021, or $9 billion on an annualized basis, which represents 1.2% of its current TAM or 0.2% of its potential TAM.
However, the picture in Q3 was not all that rosy. After it announced its result, the stock price declined by 22% in after hours trading. One of the contributing factors of this decline was the Q4 adjusted EBITDA and net income guidance for the following quarter.
That's right, Appy. Upstart projected not so rosy picture for Q4, and that led to a decline in the stock price. The company expects the Q4 adjusted EBITDA to be $51 to $53 million versus $59 million in Q3. With respect to adjusted net income, the company forecasts $48 to $50 million with respect to $57.4 million in its Q3. There is a bit of a delta in their projections for Q3 and Q4.
Upstart expects its revenue to be to the tune of $255 to $265 million in Q4, which is higher than the $227.6 million consensus estimate. It also sees contribution margin rising to 47% as opposed to 46% in Q3.
During this Q3 quarter, Upstart's bank partners originated approximately 362,000 loans, totaling $3.13 billion across its platform. This compares with approximately 286,000 loans in Q2, totaling about $2.80 billion.
Conversion on rate requests was 23%, which was down from 24% in Q2. So at this point of time, we've looked at Upstart, we've looked at its positives, we've even highlighted on the things that are not going well for Upstart. So Nitish, what is the Investor Diary's recommendation for our viewers?
That's right. To conclude, we really think Upstart is a phenomenal company and is tackling a very unique problem in the market. It has a unique value proposition to both the consumers as well as financial institutions as well. And quite honestly, a lot of folks think highly of this company, which has driven up the valuation. However, when it comes to stock price, we still think it's a little too priced. The stock price has taken a bit of a hit, approximately about 22 to 25% after the Q3 earnings, but we still think it's a little too pricey. We expect the stock to decline further, and probably a good entry point may be 10 to 15% lower than the current market price.
Folks, so we really like Upstart as a company, but we do not like the price at which the stock is trading. So wait for a pullback of 10 to 15% from its current levels, and that is your entry point.
That's a wrap for today, folks. Please let us know what you think of Upstart in our comments below. And until next time, stay tuned and stay focused.
Thank you.